Good morning and welcome to the ADS Securities Markets Update. The US dollar recovered slightly following the jobless claims figures yesterday, which declined to the lowest level since 15 years towards 662,000, which hints for a possible recovery in the labor market in April. However, we'll still need to wait for the jobs report next Friday. In addition to that, there were many economic releases yesterday, and they also came in with mixed outcomes. However, the main focus again was on the jobless claims in addition to the Chicago PMI. The Chicago PMI recovered again in April above the 50 key level, rising toward 52.3 up from 46.3, and this is the first reading above the 50 key level in almost 2 months. Moreover, the core PCE price index came in less than expected, rising by 0.1%, while the estimates were to rise by at least of 0.2%. The year-over-year has been revised even lower for the month of April and for the month of March and February toward 1.3% instead of 1.4%. The personal spending also increased less than expected, rising by only 0.4%, while the estimates were to rise by 0.6%. Finally, the personal income data came in also in flat, despite the fact that the estimates were to rise by 0.3%. These figures has led the Bloomberg Economic Surprise Index to decline again for another 7 years lows at 0.83, despite the improvements of the jobless claims data. In the meantime, the monthly close for the US dollar index is very negative, as the index has formed, or the index closed the month on a bearish engulfing candle, which is not seen since 2009, and this is also the first monthly decline after 9 months of consecutive gains, hinting for a possible or further weakness in the current month of May. As for the Asian session, there were also many economic releases during the session, which had a notable impact on the markets from Japan, Australia, and China, including the Japanese household spending, which also declined by 10.6%. The CPI in Tokyo fell sharply towards 0.4% on a year-over-year basis, down from 2.2%. We had also the national core CPI increased a little bit toward 2.2, up from 2%. However, from China, the manufacturing PMI stabilized at 50.1, despite the fact that the estimates had been anticipated to decline toward 50.0. In addition to that, the non-manufacturing PMI in China eased slightly back toward 53.4, down from 53.7, which is the lowest reading since January of last year of 2014. Finally, in Australia, the quarter-over-quarter PPI increased by the most since the first quarter of last year, rising by 0.5% in Q1 compared to 0.1% in Q4. But however, while it had been anticipated to rise by 0.2% only, this also doesn't change the idea of a rate cut by the Reserve Bank of Australia next week. Going forward to the European session today, most of the European banks are closed in observance of the Labor Day. Therefore, the volatility may decline during this session. However, in the UK, we will be waiting for more economic data and releases, including the manufacturing PMI, which may also rise again toward 54.6, up from 54.4, which would be the highest reading since mid of last year, or since mid 2014. In addition to that, we'll be waiting for the net lending to individuals, which may also increase toward 2.6 billion, M4 money supply, and the mortgage approvals, and most of these figures are estimated to be higher than the previous readings. As for the US session, also there are another set of economic releases. Economic figures will be released today, which may have also another notable impact on the market, especially if they come in with another surprises, including the ISM manufacturing PMI, which is expected to rise to 52.1, up from 51.5, which would be the first rise after 5 months of consecutive declines. Moreover, we wait for the revised University of Michigan consumer confidence, which also may revise higher toward 96.1, up from 50 or 95.9. In addition to that, the construction spending should be watched very carefully today, as it is expected to rise by 0.5%, comparing to another decline of 0.1%. But if the numbers came in with less than expected, the Q1 GDP may be revised even lower. Looking at some technicals, and as I noted before, the monthly close for the US dollar index doesn't look really good, which suggests also another decline in the month of May. But the euro also has formed a bullish engulfing candle, which suggests another rally in May, and the next target, or the next possible resistance, stands at 1.1395, which could be seen during the month. Cable also closed the month higher. However, it failed to sustain yesterday's gains and closed at the month below March's opening price, which also keeps the outlook slightly negative ahead of the election next week. We will publish our new monthly report as early as next week to show the possible trends for the major currencies and for the month of May. This is it for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching, and have a good weekend.